Titans, my favorite two indicators are showing me that big moves are coming in for Bitcoin and Pepe very soon. So let's discuss that and what you need to know before we head into the weekend. Kevork, hit that intro. Let's kick it off with the Crypto Fear and Greed Index. Just a quick note that although the name of this index would suggest that it's generally all crypto, the gauge primarily fluctuates based on the movement of Bitcoin. So today we are at 79, which represents extreme greed. So let's keep that in mind as we head into the weekend. Now let's move on to your daily reminder that the Bitcoin halving is in just 23 days. Also note that the halving date is now currently estimated to be April 22nd. But again, it's a moving date based on whenever the 210,000 blocks have been added to the Bitcoin blockchain. And for those of you who are new to crypto, this event marks the time in which the Bitcoin reward for the miners will get cut in half from about 6 Bitcoins to about 3 Bitcoins every time a block is successfully added to the Bitcoin blockchain. Moving on to the Bitcoin liquidation heat map. Just a quick reminder that this map tracks the short and long position liquidity for Bitcoin in areas that are either light or dark yellow. The yellow areas will either be above or below the current price action, which are the short and long positions respectively. So looking at the 1 week window, there is nearly $1 billion worth of liquidity building up above the current price action at around 72K, meaning that the short positions are piling up high. This liquidity is definitely more concentrated than the long position liquidity of about 480K below the current price action at around 68K. We just saw a similar setup 2 days ago, and it led to a short squeeze first, and then the long positions got liquidated not long afterwards. It doesn't always have to go in that order, of course, but generally before a big move comes in, you tend to see the leverage get liquidated on both sides. Now let's take a quick look at the Bitcoin ETF flow table. Just a quick reminder to anyone new to this table, we're tracking how much Bitcoin the institutions such as BlackRock, Fidelity, ARK Invest, etc. are buying to back their ETFs based on the millions of dollars they are spending per day against how much Bitcoin is being sold by Grayscale in millions of dollars as folks are switching out of Grayscale Bitcoin and into the ETFs. Yesterday, March 28th, we saw a total inflow of $182.8 million worth of Bitcoin flowing into the ETFs. And what's also worth pointing out here is that the outflow from Grayscale was only $104.9 million, which is the second lowest outflow we've seen from Grayscale since March 12th, which was at $79 million. It'll be interesting to see if the outflow from Grayscale continues to taper off from here, so Monday's update will be interesting. Guys, this is your reminder that we are only 55 days away from a decision to be made by the SEC for the first Ethereum spot ETF by May 23rd. Don't sleep on Ethereum because you know what happened to Bitcoin leading up to the approval of the spot ETFs back in January. All right, now let's hit the charts. All right, we're looking at Bitcoin on the 4-hour time frame, and as you can see here, we had a breakout from the bull flag pattern that was forming in the middle of this week, and we had a successful retest of the breakout afterwards. So from here, I would expect us to continue going upwards to retest the 71K to 71.4K resistance zone. And if we manage to get through this zone, I would expect us to get back to retesting the 73.8K all-time high that was recently created. I do also want to point out that I'm taking a conservative approach on measuring the length of the bull flag pole because of this impulse here. But there is certainly the possibility that the length of the pole could include this area here, which would lead to an even higher price target. But again, I would just like to see us get back to retesting 73.8K level first. It's also worth noting that a big move either way is coming in soon because the Bollinger Bands are very tight here, and the Bollinger Band width indicator is also in the squeeze zone. Zooming out to the weekly time frame now, the most important thing I'm looking for is closing this weekly candle on Sunday above the 65.5K to 69K support zone. As you can see here, we are in a good position to do so right now, but there's still plenty of time for that to change, of course. If we do close above the 69K end, I would expect us to continue seeing higher price action. However, if we cannot stay above 69K, then there's a strong likelihood that we will continue consolidating and moving sideways, with 65.5K being the first line of support. Now let's revisit the Pepe setup we covered on Wednesday. Again, I know it's a meme coin, and who knows if this meme coin, like most, have any true utility. So looking at Pepe on the 4-hour time frame, we still have an ascending triangle pattern here in yellow, and the target for the breakout is approximately 0.00001032, which would represent about a 22.5% gain. But as this pattern continues to form, we can see an even larger consolidation pattern forming around it, which has a breakout target of approximately 0.00001385, which will represent about a 64% gain. Adding to that, we can see that the Bollinger Bands are getting very tight in this area here, and the Bollinger Band width indicator is well within the squeeze zone. Now, before we leave this, please note that we need to wait for confirmation of the breakouts for each of these patterns first. And if Bitcoin breaks down from here, obviously these setups will more than likely break down as well. So if you're following along with us, then please draw these patterns on your charts and keep an eye on the price action. Titans, we are your one-stop source for guiding you through this Bitcoin bull run. Please join us as we continue to provide the latest market and technical analysis that are going to give you that edge.